Hello, good evening, everyone. Very warm welcome again to our second session on supports and resistances. As discussed in the previous live stream, previous to previous, I suppose, previous live stream was related to euro parity, about the historic event that happened in the price action of euro USD. Currently, we are going to focus today on supports and resistances. Good evening, everyone. Yes. So we are going to discuss today the supports and resistances and how it is very foundational, I would say, to any form of analysis, any form of trading. You must understand the uh, dynamics of demand and supply, and that dynamics of demand and supply gives birth to supports and resistances. Okay, so we are going to wait for some good amount of people to join in, and then we'll begin with today's session. Hello, everyone, newcomers. Yes, hello, thank you. Yeah, okay, great. So, what we will do today is I'm going to keep it short and simple. It is very advanced concept, to be honest, but we are going to keep it very simple. In basic terms, I'm going to introduce to you the basic terms as well as how to actually practically do it. Okay. And previously also we discussed, but in a hurry, I showed you everything. Today we are going to take it slow. And one of my brothers from Vantage, my elder brother, to be honest, yeah. So Rohit sir told me that we must keep it simple. So we are going to keep it simple. Okay. So no worries regarding that. Even the beginners will understand. Okay. So I will just start up with our presentation today, isn't it? Yes. I suppose this is visible. Okay. Okay. So I suppose this is visible to everyone. Please give me a thumbs up. Okay, I suppose it is visible. Good. So we are good to go. Our first presentation is regarding, obviously, it is a continuation of previously done supports and resistances. Your humble analyst here, Mohammad Abu Tarab Sheikh. And what is the agenda for today? Obviously, sir, why are you boring us with supports and resistances? So much of support and resistances. Teach us something. Okay. So don't worry. This is one of the most foundational thing that you can ever do. Okay, and supports and resistances themselves will allow you to trade any single day, any day. You pick up any day. If you know the support and resistances, to be honest, of that particular day, then you will completely understand when to take a trade, when to enter, when to exit. Okay, and you will also understand the risk that you are taking, because you already know that at the support, if you are entering, then you have a very minimal risk. Okay, if it is above the support, it is somewhere in between that support and resistance line, so there is a bigger risk. So you understand so many things just from this two analysis, just understanding supports and resistance. Okay, another thing that we are going to cover is pivot points in deep. Obviously, in the previous session I already uh, made this and explained to you about pivot points. Today, we are going to dive in a bit deeper into understanding what is pivot point, how to actually understand pivot points, and how to apply it in day trading. Okay. The next thing is relevance of multiple confirmations. Now, this is some form of an advanced concept here. It is a bit advanced. I will try to keep it as simple as possible. And to keep it simple, I am introducing today the moving averages. Okay. Many people consider this to be very basic. Arey sir, this is very basic. We are on moving averages. We are using Bollinger Band. We are using MACD, MACD. So this is why are you teaching moving averages? This is so basic. My my son uses moving averages to trade. So that is not the case. Actually, moving averages are considered to be the most effective method in trading. Okay, it is the most effective. And if you would consider that moving averages have given birth to other indicators, this is the only form of indicator. Okay, if you consider it as an indicator, I consider it as a barometer of the market, of the barometer as such, because it confirms trends. It shows us trends and it confirms trends as well. So role of moving average we are going to understand. People consider it to be very basic, very simple, but if you are going to go in depth of moving averages, you will understand there are hundreds of moving averages, 100 type of moving averages. There are thousands of utility of moving averages. Okay, if you're going to trade only using moving averages, that is also possible. And obviously, moving averages themselves can be considered to be a support and a resistance line, which gets updated with every close. Right, every close means every bar, every candle, it gets updated, moving average. So that is the utility of moving average. We are going to see how we can do that. Okay, so previously also, just wait, give me a moment. Yeah. So previously we saw this. Okay, I've already drawn supports and resistances using the price consolidations. Now, some people might not know this, so I will again explain it to you in very simpler terms. What is consolidation? Okay, then repeated highs and lows of price action, that we will see today. Zone analysis is very advanced. To be honest, it is very advanced. And if you will go in-depth study of zone analysis, that itself becomes a topic of discussion. So we will kind of avoid today. I was hoping to take zone analysis today, but no worries, we are going to take it in the future, so don't worry about it. And use of indicators, obviously we are going to see pivot points today. And pivot points also has multiple variations. There is Camarilla, there is Demark, there is traditional pivot point, there is Fibonacci pivot points. So you can use any of them, but you must know what exactly and where exactly you have to use that particular variation. So I will tell you which to use, where to use exactly. Okay, so okay, now for those of you who are joining in for the first time, I'm just going to tell you what is the meaning of supports and resistances. Okay, I will just stop sharing and I will open the charts. Okay. Hmm. Okay, here you can see, I suppose. Okay, I've done something. Really sorry. So let's clean this up and let's get to some good amount of understanding. Okay. Now we have cleared this up. Okay, so I will make you understand what is supports and what is the resistance. Okay, first of all, what is the meaning of that? The support is any level where multiple times the price action reaches and it rebounds from there. In case of a price action that is moving. Okay, so I will just show you and you will tell by yourself how it is happening. Okay, so consider this to be a line, and this is obviously a candlestick chart. I have kept it very uh, it is very short, it is very small, but you can see that this is a level where you find that multiple candles have been tested. Okay, multiple times it has been tested. For example, this went into this zone, this almost this particular line. Okay, then again it got tested here. Now the good thing about supports and resistance is that you can discount these wicks. You already know this wicks, right? This is a real body of the candlestick, and this is the wick of the candlestick. So you can discount these wicks. These wicks, you can let it float below this line. So I'm letting it float below this line. So this is the first point where it tested this particular support level, which is 1904. We are talking about gold, and it is hourly chart. So I will also teach one thing before that. Instead of doing hourly, we should go for a higher time frame. So I would consider daily to be a better chart. Okay. Why this is called a top down approach? This is called top down approach. What is top down, sir? What is top down approach? Top down approach. Oh my god, what is this? Bad gateway. Okay, there is some difficulty. Okay, so let us use this particular thing. Is the chart visible, everyone? Just give me a thumbs up. Let's see if this chart is visible or not to every one of you. 8, 9 people are there. Just post a thumbs up. Okay, nice. Thanks, Biswajit. We got your message. So you guys can see at this point we are using this from Vantage. Basically, we are going to change our source and keep it as Vantage only. Okay. USD JPY is kind of very interesting. I would say very interesting thing is going on in USD JPY. And as we have already seen, let's start with USD JPY only. We were on gold chart. Sorry for disturbing your flow, but I will show you very interesting things happening in USD JPY. Okay, just clear everything up. So let's start with the beginning only. I've told you previously in our first live stream itself that trend lines which we make, like I have made here, this blue line, this is a very important line as such. Okay, because it acts as support. Okay, so the uptrend started from this point, 11th March in USD JPY, and it continued. Okay, uptrend continued, and then it pulled back. This is called a pullback, right? This is this is called a pullback. That means the price pulls back from a higher level and it reaches to the trend line. Now trend line is acting as support. Understood? So this is called a support. Now you will, if you will zoom in properly, you will also see that the price is consolidating. Consolidating means multiple candles, small candles are being formed. Okay, and these are being formed in a small range only. That is called a consolidation. I will make it very clear to you. Okay, don't worry. So from this to this, you can see this consolidation, multiple candles in the same range every single day. It's opening here, it's opening here, it's opening here, closing here. This is almost a doji. Then it, now what is doji, sir? Let it be. I will explain it to you in the next session. What is doji? This is basically a candlestick pattern, a Japanese candlestick pattern in which the real body is absolutely minimal. Okay, there is no difference between open and close. That is almost a doji. Next is the open is here, gap down, and sorry, the open is here and gap down, it closes here. Okay, then next it opens here, closes here, opens here, closes here. So what is happening here? The open and close of the candles are in a range and it is consolidating at this position. We feel that this is making its mark somewhere. It is resting for some time. Okay, so the candlesticks are resting for some time. They are taking a support. Understood? This is meant by support, where the price consolidates. Okay, and there are multiple wicks. If I just take this away, there are multiple wicks. Look, one, two, three, which touch the trend line, but nobody closes below the trend line. This is the very important aspect of trend lines itself. So if you consider, sir, why are you not showing indicators? I want to use advanced indicators to trade. Why isn't this a very good opportunity for you? You see that supports are being taken on the trend line, and you feel if you have got any other confirmation, so you can take an open trade, you can take a long trade here. You would have got so much money. Isn't it advanced? Isn't it advanced? I would consider this at very advanced. So people start with MACD, people start with RSI, and they forget all this. So they take decision according to an indicator which is based on price action only. Okay, wait a second, just. So yeah, we were here. Just a moment. Okay, this one. So multiple people say that, sir, I use RSI, I use MACD, I use some advanced indicator. Why are you not using it? Right? Oh, why to use it? Because every single indicator, note this and note this everywhere. Okay, if you're a trader, you write it on the wall which sits in front of you before you trade. You write this line that every indicator is based on five data, five types of data: OHLC and V. Write this and you understand this every single day. You read this every single day. Okay. What is this five data, sir? OHLC. What is OHLC? OHLC is nothing but open, high, low, close. You can see here. You can see here, right? Oh my God, this is fixing it. Very bad news. Okay, this one. Yeah. So every indicator is based on five types of data: OHLC and volume. Okay. And this is the parent material. Okay, this is the parent material of every indicator. You show me even a single indicator which is not based on this. Understood? So then you might say, okay, MACD is not based on price data. It is based on the moving average. But moving average is again based on the price data only, right? So you understand the level of importance I'm giving to OHLC data on the volume data. The level of importance is it is not emphasized enough, right? And I'm going to teach you in a manner which is actually helpful. I'm not teaching you just for the sake of teaching you, okay? Just giving you some tips and tricks. That is not the way to do it, right? Okay. Because I know this is a trend line I've just drawn. Okay. We join the lows in case of an uptrend. You already know this. You go back to our first video and you see that how to make a trend line properly. Okay. So this is the way I have drawn this line. Now, this line was not here. Okay. This line was here probably when this price was here. Okay. So it broke down here. So I might have shorted here. But seeing at the consolidation later on, I chose to close my deal and update my trend line next. I updated my trend line. I saw a new trend line being made. This is called an updation in the trend line. This must be done. Okay. So now I will tell you this trend line was made even in our first video, if you remember. When I was supposed we were in June. We were in June or July. We were in June most probably. It was made here only. Okay. On this live stream only. This trend line was made. Now you see when the price closes below, this is closing below this candle, you can see red candle. Why I'm saying that USD JPY is actually performing really well, and those who are looking out for trading opportunities, this was a golden deal for you guys. This was a golden deal, I'm telling you. Now look at this. This is the date of 28th July, right? 28th July. 27th July was the data of Fed. The Fed increased its interest rate, right? Now let it be. Interest rate, I will explain it to you later on. What impact it had. It actually had the basically the inverse impact. So I will show you why it happened in that manner. Leave it away. Okay, just talking about the technical analysis, I have drawn this trend line on 30th May, right? I'm telling you that I updated from here, I updated to this point and I updated my trend line. I was ready for any breakdown. This is called a breakdown. Okay, it's not called a breakout. Opposite of breakout is a breakdown. So this is a breakdown. Now look at the strength of this candle. If you will see it closely, look at the strength of this candle. This candle is huge, and this candle is almost a Marubozu. Okay, this is what I call a very golden opportunity because Marubozus are very rare. Okay, and this is also not an perfect Marubozu, but I will call it a Marubozu for the trading sake. Okay, so here it landed all the way here. Now the next day, what you will do? You will short. You will short without seeing anything else because you have already got a very strong hint. You can confirm it with any other indicator that you like, MACD, RSI, or any other momentum indicator, Bollinger Band, whatever it is, volatility indicator, Bollinger Band. You can confirm it. That is called a confirmation. We use indicator to confirm. Okay, we see the price chart to understand where the price is going first, and then we look at the indicator. We don't look at the indicator first and then decide when to enter, when to exit. Understood? This is the way of trading. Okay, if you're trading, if you're understanding things, if you are a beginner in this thing, so you must understand that price chart is everything. Okay, don't emphasize it, don't underestimate it, right? So the price chart, you will also have to look at this. You also have to look at the trend line, and this is a very outstanding breach of the trend line. I will short in the next day. I will short at 134 to 79, and the current is 130, 400 pips I've got already in my pocket. I've already pocketed 400 pips, and still it is going very strong down. Okay. Now what today can happen in USD JPY? So we will close this session at almost around 6:30, right? And there is going to be a data called JOLTS job openings. I will tell you what it is. Okay. JOLTS job openings. This is the data of US. Okay. USA. Now, this job openings means that how many openings are there for jobs, new jobs created in a particular month. Okay, in a particular month for the people. Understood? So, these job openings will lead to an understanding of employment situation. Obviously, job means employment, isn't it? So, employment, right? And employment is a indicator, is a sign of a healthy economy, right? If there are many people working, that means many people are contributing to the economy, right? Many people are earning, right? So they will spend also. Understood? समझ में आ रहा है everyone? Hindi speaking people, are you understanding this, or shall I just switch to some Hindi language? Waterfall, acha. Okay, nice. So waterfall has begun already, and this was done probably in our first video itself. I had drawn this trend line in the first video itself, and now it has shown us the correct method. What happens and what is the importance of trend line? First of all, 400 pips from here to here, and still the drop is continuing. There is no stopping this drop. There can be a stop, there can be a pullback again, but I don't think it is going to happen. I don't think, to be honest. Now, the employment means we were talking about job openings. Job openings means employment. Employment suggests that the economy is healthy. Okay. Now, healthy economy means healthy currency as well. Correct. So the currency will be healthy. Okay. The currency is healthy. Correct. But if the Jolt's job openings, its expectations is around 10.99699 something, 96 to 10.99 million job openings. Okay, expectation. And if it goes below this expectation, I don't suppose it will go below this expectation, but it will go below the previous data of job openings, like the June data of job openings. It will go below that. What will that suggest? That the currency is weakening, the economy is weakening of which country? Of US dollar, which means that Japanese yen is its counter currency. Now this is called counter currency, this is called USD. When I'm saying USD JPY, USD means base currency, okay, and JPY is the counter currency. I'll just write it down. These are very basic stuff, but you must know everything. So in here, base is USD and the counter is JPY, right? Base counter. Next, what does this mean, sir? Base counter. What is this counter? What kind of counter? I will tell you. This nothing. This means nothing but one USD equals how much X number of yen. Okay, yen means Japanese yen. Okay, so one USD equals to how much yen? So one USD equals to currently 130 yen, 130.7775 yen almost, right? So this means this. Now the healthy currency, healthy economy, all the stuff is done. But rest assured, what happened here? It happened very fast. Almost many people didn't get even a time to take a trade here. I've already given a trade here for most of the people. And I've already told you to monitor this trend line. This trend line must be monitored. You make a trend line, you forget about it, doesn't matter. You won't be earning money in that scenario. Okay. What happened? A very steep downtrend. Now, steep, another problem is that with steep downtrends, that it is not going to last forever. Okay, it is going to somehow get into a consolidation. It is somehow going to get slower. Okay, so that will also we will also see some form of a pullback. But overall, I suppose it is a good time. Again, this rally, this drop can be over, but you can short if it goes up. You can short if it pull back somewhere. Okay, I will show you. Wait a second. Where is path? Yeah. So if it goes here, it comes down. It might pull back. Okay, for some day. It might also consolidate for some day. But then again, there might be some reason for the market to pump it again down. Why, sir? Why is it happening? Because of fundamental factors. Don't need to worry about it. Market already discounts all this information, all this news. The market is already discounting for such news and for such information that is coming out. Okay. So why I have chosen this level only? Why will it go all the way here only? Because this was a support here at this point. Can you see that? A very strong support here, isn't it? So it might act as a resistance next. I already taught you this. Again, for beginners, again for who are coming for the first time uh, to this thing, to our live stream, I will tell you it is called change in polarity. Okay, like a magnet has poles, north pole, south pole, right? And when we break that magnet in between, what happens? The north becomes the south and south becomes the north. The same thing happens here also. Once it was a support, once we break from here, it might become a resistance again. And this is what is happening. It might consolidate at this position and then it might go again down, because US economy is shrinking. Okay, along with a lot of other countries whose economy is shrinking, especially the European countries. In fact, Germany is also shrinking, which is absolutely mind-boggling. I cannot wrap my head around it, that Germany's economy is dwindling currently. So a lot of fundamental factors, a lot of news will come out. You don't have to worry about anything. You just consider and you just believe me when I say that markets discount for all information. This is what I have taught you in the first live session itself. Okay. And why the first live session I taught you this? Because I knew that multiple people will ask this question. that why sir you are not using indicators, why are you not doing this, why is it that, why is it like that. Okay, what is the meaning of this news? Don't have to talk about any news as such. The market will discount any information that is coming out or that is going to come out in the future. That also we saw that in the case of the rate hikes. Don't worry about those things. You consider that technical analysis is the only thing that you are supposed to take care of. And if you would have taken care of this trend line, you would have shorted at this position and you would have pocketed more than 400 pips in just one trade of USD JPY. Outstanding thing happened in USD JPY. A very, very great opportunity. And the good thing was I've already taught you this. I made this trend line in the live session. And that was that is absolutely fantastic that this thing happened. And I wanted to show you this. How even not using a single indicator, can you see any indicator on my screen? Absolutely not. There is not a single indicator. Now here it is showing the news. Look at this. Jolt's job openings. It is showing 7:30 time. So once we get out of this, you look at this job openings. If it is more than the expected amount and it is lesser than the previous number of job openings, like the previous also is shown in the data. If you search for job openings data, you will get it online. So what do you take? What is your takeout from here? That the employment is going to decrease in USA. That means the economy is also going to be having a setback and the currency will also have a setback. That means what? The USD JPY will keep on falling. Understood? That is the takeout for today's video. From a fundamental perspective, we understood the employment part also. That is an extra point that you are getting today. Absolutely. Okay, nice. So let's just check any other. No, no. Waterfall. Okay. Acha. What is no, no? What happened? Okay, no worries. So if you will, guys, I'm just taking gold for now, and those who want to take any particular pair right now can comment here. I will take a few currency pairs. Okay, for analysis. It will be live, obviously. That is why I'm considering your suggestion itself. I might have done some analysis. I might not have done some analysis. We'll do it together. Okay. Indicator answer no. GBP JPY. Okay, understood. Understood. Yeah. So GBP JPY has come. It is almost the same condition in GBP JPY. I will show you. Not almost, but kind of the same. So we'll go to gold now, and then we will cover GBP JPY as well. What is the condition in gold? Okay, so much of things here already. Just clear thing everything up. Hmm. Okay, right. Okay, yeah. You've got a cleaner chart, a cleaner idea. And we all saw that there was a big rally from here, 1721, 1680s somewhere. And then we are headed to 1800 target again. Okay. Now, this also I have done previously. I have shown you a very beautiful method to draw a parallel channel. Okay. So, one second high. Okay, I will just change that later on. And this one. I'll just, yeah. Okay, everything is fine. Yeah. So here we have got this beautiful parallel channel downtrending, and even in downtrend we have got so much of information to carry out. Okay, this is a very beautiful thing that is happening currently in the market. It's an outstanding thing. Okay, so we saw that there was a consolidation again in this region. I will show you it. Almost a consolidation. Open close, open close. Yeah, open close in the same range. Open close in the same range. Okay, done. Open close in the same range, open close in the same range every single day. But then we saw a breakout. And when do I take a trade, sir? Okay, I will show you. We see that we will put in some indicators for now. Pivot point standard. Standard you have to choose, not high low. Okay. And another I'm choosing is moving average. I will take two moving averages. Okay. Now the first thing that we got to do is it is looking like a cluster, so much clutter, right? You cannot take out much of the information from here, right? First of all, I will show you some settings of the pivot points as such, how to use it. A pivot points is based on, first of all, the HLC data. HLC, it is also called HLC 3 data. 3 means average. So H plus L plus C divided by 3 is the pivot. Okay. Now what is HLC? High low close. Okay. So what is the high low close, sir? High low close of the previous trading session. So if you're talking about day, then it will be the previous day. Okay. And this is a daily time frame already. So it will show us the pivot point for whole month. For the whole month, it will show the pivot point. Understood? Okay. Now what will happen, sir, in next? So the pivot point, we got the understanding of HLC 3 data. Now look at the settings of this. You will see that you have to keep everything normal. Okay. There are different types. Look at the type. There is traditional, there is Fibonacci, there is Woody, there is classic, there is DM Camarilla. All have certain utility. Every single pivot point has got some form of use. But what we use traditionally is just the two, traditional plus Fibonacci. I mostly prefer Fibonacci because it is based on golden ratio. Now, what is golden ratio? Again, I will have to explain you so many things. That is a very deep concept. Don't worry about it. It is a very good type. Okay. So you can use Fibonacci. Don't worry. Trust me. Yeah. Another thing, just change your colors. You can change your colors from here. So I've kept the pivot as white because obviously the background is black and everything is normal. So pivot you have got as the HLC 3 data. We have got resistances above the pivot and supports below the pivot. Okay. Now how they are calculated? I have got a very good write up already on our Telegram channel, so you can check it out. I've already put up that information on pivot points. So now where do I take trade, sir? How to take a trade in this situation? You have drawn so many things. I am barely not able to see anything. Okay. So this is the first MA. I'm keeping it as 50. 50 length of the moving average. Okay. Another, I will keep it as 20. Okay. We'll change its color a little bit, Hana. So you might be able to see it better. Opacity you have to keep that way. 20. That is good. Good enough. Okay. I'll change this as white. White doesn't look good. I'll keep it yellow. So 50 is yellow, and this mint green is basically 20. Next thing that we do is we analyze the situation. When will I take a trade, sir? When shall I take a trade? Now notice that this is a daily time frame. Okay, so you will understand a lot from the daily time frame, and then you are going to apply that information, that assumptions that you basically your results of observation to the smaller time frame. So you understand the daily time frame first. First, I'm going to remove this pivot point. Just look at the moving average and just look at the parallel channel. Okay. Observe this for some time and you will understand what it is doing. You can see this. See the previous point? Yeah. Look at this. This yellow one is, I suppose, 20, 50. Yellow one is 50 and this mint green is 20. Now, look how it is waving. It is waving, waving. And this 20, that is a faster moving average. 20 is obviously a smaller time frame. So it is a faster moving average. It will move with the price faster, right? It will move with the price. Look at this, how fast it has moved up with this uptrend. But the 50 was a bit slow, right? So this is called a smaller time frame because the time frame, the number of periods that we have chosen is 50, which is bigger. Understood? So it will go slow and fast. We have got the combination, a deadly combination of slow and fast. Okay. Now we will understand how it is happening. This is again a consolidation here, but the price went down and then it consolidated this position, pulled back up again, and formed a channel. At this position, we got that it has formed a channel. 18th April, we got the information that yes, a channel has been formed because we got 1, 2, and down 3. 3 points we have got already. Correct. Next thing in this situation is look at the moving averages. Don't look at the 20 moving average, look at the 50 moving average. Okay. Now the moving average of 50 crosses over. This is called a crossover. Okay. The 50 crossover and 20 cross under. This is called cross under. If you're actually looking out for technical terms, this is how we say it: cross under, cross over. So 50 crossed over 20, which means slower guy bypassed the faster guy. Okay, what does that mean? That the price is losing momentum, the price is kind of going bearish at this position. You understood? Yes, the next day I will have to short, right? So you might short at this position, you might look for shorting opportunities from here. Okay, and if you might have shorted here only, you would have got so much of profit that you would have gone absolutely crazy. 1894 to 1800 somewhat, right? You might have gone crazy, obviously, on single trade, so much money. No, no, not crazy, I'm just, yeah, you understand me, yeah? So this is the crossover of 50, that is the slower moving average over the faster moving average. This is a bearish signal. Okay, again we are seeing what this 20 moving average is struggling to move above this yellow 50-day moving average. It is struggling, obviously, yeah. We have seen this struggle here, we have seen this struggle here. Now again, one thing you have to note, that at this position you will see that this 50 moving average is becoming a resistance for this particular price action. Isn't it becoming a resistance here? You see green tried to go above this, it tried to touch this moving average, but the next day it was all the way, it was hammered down, it was almost hammered down. Look at the movement here. A single candle, it is open is 1875 and closes 1819. My god, $55 of hammering, and then we see some pullback and then again shorting. Okay, again this 20-day moving average is also becoming a resistance. This almost consolidated here. It tried to breach the 50-day moving average, failed. It completely failed in its mission. Then it will, what will it do? Once you fail, what you do? You go home, right? You go home completely. You go downtown, and then you see that our channel is also working very smoothly, very fine. We have already tested this particular position. We have made this channel at 18th April. We have tested the lower limit at 16th May. And again, when we see that this is the downturn we are expecting, we would consider that this must be the target for every day. So if you are considering this particular day, that is 6th of July, I would consider below to be this level and above to be this level, right? But this is very huge, very huge margin. I will tell you how to reduce this margin. Don't worry about it. So the moving average is obviously above. That means we will not look at resistance at all. We will not look at the upper limit. We will only look at the support level, the below limit, right? And this is how it has gone down. And from this position, 21st of July, there has been some form of a choppy session here. Okay, and almost a wait. I will show you. So almost a almost a curvy U, right? Rounded bottom, almost, right? It is forming a rounded bottom almost. This is very steep rounded bottom, है ना? This is a daily time frame. That is why I'm drawing such patterns. I'm able to draw. If I'm doing this on 5 minutes, I might be called. I might not be correct, right? I might not be correct. But this is a daily time. I can draw such patterns, and this is how it has turned out. Obviously, well, look how the curve is forming, and look how the resistances are also. This is also acting as a support here, right? And this is how we went up, correct? So this was something that happened in gold, and currently we are looking that again the price is going to test this moving average, 50-day moving average. It completely breached the 20-day moving average. Now, when will I take a trade, sir? Iti there say you are saying so many things. Support, resist, support. When will I take a trade? I want to earn money. When the price action is below moving average and it breaches the moving average. Breaches means it breaks out of that particular moving average, right? It crosses above, then you can take a trade. So in this candle, you might have taken trade, which is almost like 1734, right? 1734 to 1750. This range you might have taken a long trade, okay, and obviously you might have earned money. Depending upon your entry, you might have earned money, good amount of money, correct? Now I would like you to note one more thing. This is the middle line, this dashed line you can see in between this of the parallel channel of this blue zone. Can you see this? How can we can identify that a descending trend is ending? Okay, I will tell you. Wait a second. Descending trend is not going to end unless and until it will breach this particular position. First, the biggest challenge is this 50-day moving average. One of the biggest challenge is this 50-day moving average. And even after breaching, there is no, I would say, there is no possibility, there is no completely surety, a certainty that it will completely convert into an uptrend all of a sudden. Okay, what it will do is it might test once. Okay, it might test, it might become successful, it might be successful, obviously it might be successful, there is chances. Okay, let's say tomorrow or day after tomorrow it breaches this moving average, but again another resistance is waiting for it, right? This resistance of the parallel channel is waiting for it, right? So that day or the next day, whenever you are looking at the chart, you know that this is going to be the resistance above. Okay, every day it is updating na, because it is going down, it is updating itself every single day, you have a new resistance level. But when it will breach with a strong candle, that also you have to remember, it must breach strongly, not weakly. Okay, like we saw in the case of USD JPY, you saw na how strong was that candle, that I was calling it a Marubozu, right? I was calling it a Marubozu for a reason. Understood? Why I was calling it Marubozu? Because there was a reason behind it. It is a very strong bearish movement, and that is why it has went into a waterfall. Somebody told this in the comments. Huh? It is almost a waterfall. Now here also this is very steep uptrend. Now the problem with steep movements is that it does not sustain. This is from an experience perspective. I'm telling you, steep things never go good, never go like a long way. So it might test this, it might even go above, but it might go back down and then reach this particular position and then try to go up again, and then it might breach up. There can be cases in that manner also, or in this manner also. Understood? Another thing that I wanted to show you is the pivot points, right? We have got very less time. Just show you this outstanding indicator. People use Fibonacci retracement, they use Gann fans, they use projections, they use so many of tools, but still, basic things are the best in life. Okay, basic things are best in life. Why I say this is because I have seen it happen. Okay, the way we have made a trend line on USD JPY, and if I followed that trend line, I believed in that trend line, then I could have earned a lot of money there, right? So there is a position in any particular pair, there is an opportunity just waiting for us. But what we need to identify is how can we basically understand it in a very simple manner, right? Now for pivot points, this is the pivot point. Okay, this is called a pivot level. Okay, now you might call it pivot, somebody calls it pivot, but the correct pronunciation is pivot. You might check it. Okay, call it pivot, that sounds better. Okay, so the thing is, if we are selecting the daily time frame, the pivot will be for the month. Understood? This is for 30 days. I will show you how. Look at this is the starting of the month, this is 30 June, this is the 1st June, July, sorry, this is the 1st July. When will it end? On 29th June. New month, new pivot 1st August. Now this pivot will go on till September, till 30th 31st August, the last trading session of the current month. So this pivot will be applicable for the whole month. Understood? When I'm selecting the daily wala chart, okay. Now once I see the daily chart, I can understand so many things just by looking at this. A type of pivot that I've chosen is Fibonacci. Okay, that you have to remember. Keep all the settings as the same. You can change the colors as such according to your liking. Somebody changes every single color, every single supports color, every single resistance color. color. So they feel good in that. You might also do that. Okay, but this is basic. This is understandable. So what I've done is white is the pivot. Now, previously we saw a very steep downtrend, okay, in gold. And what happened at the end was it went all the way down. It reached the last support as well. Support 3, 1753 was breached and it went completely down. Okay. In such situation, there is uncertainty, very high uncertainty where the price will go. Okay. That is why some choppy session happened and then it picked up its pace due to some fundamental factors, due to some demand and supply positions in the market. Okay, don't worry about it. Just look at the chart. So some choppy session happened and then it started picking it up. So from the last 5 days, it has been rising. The gold price, it has risen from what is it, 1711 to currently it is trading at 1785, which is a very good rally, very strong rally. Again, this is a very steep rally. Okay, you understand my point. It is not sustainable for a very long time. Okay, have you seen a rally like straight line? Obviously not. You won't trust that rally. Okay, so I usually tell you to long here, but long with caution. You can long here, but you can long with caution. That is a disclaimer with the movie that you're going to watch. So understood. So this is the case. The next thing that I will note is where is the pivot starting, where is the price action starting, and where is it starting exactly. So the open is above the pivot. What happened? The first candle of this month, August 2020, 1st August, the open of this candle was above this pivot. What will I get from this? I will reduce this information that for this month the price will be bullish. Okay, the price will be bullish. It opened and closed all the way up only. Okay, it didn't try to get support from pivot. Understood? It went all the way up. Now it has been in the rising, that is why it went all the way up. Okay, but I have got a brief idea that in this month the price will be bullish in gold. But again, we have seen the parallel channel. Okay, that also you have to remember. You have seen the moving average ka resistance, that also you have to remember. So when you're taking a trade at this position, we already know that in the daily time frame it is bullish. Now if you go to the smaller time frame, say for example 1 hour, I'm not very comfortable with 1 hour because 1 hour is like 3 to 7 to 15 days. You have to wait for the trade to end. So what we will do is we will go to 15-minute time frame, which is better suited for intraday traders. Okay. Now this will look like this 15-minute wala candle. Now, sir, there is a lot of changes. Obviously, there will be changes. Now, where is the changes exactly? So the pivot, which I told in the daily time frame, will be for the whole month. In this scenario, there can be false breakouts, right? False breakouts. I will tell you. Wait. Okay. So pivot, we have got this for. We have chosen a time frame smaller than the daily time frame. So we are going to get a pivot for the whole day. Okay, so how many candles are going to get formed? 15-minute candles within a day. So it will start from 3:30, 2:30 in the night, which is the international timing of change. So 3:30 in the night, and it will end in 2:30 or 3:30 in the night, right? So almost that. So the price has in the daily time frame also it has started from this position above the pivot. What does that mean? The price will be bullish for the day, like I deduced from this position that for the month it will be bullish. For this month it will be bullish. Correct? This will be bullish. We're seeing this opening here. For the 15-minute time frame, I'm going to say the same thing. If the starting candle is, wait a second, just give me a moment. Okay. Oh no, no, sorry. So we have got this position. Okay, this is a 15-minute time frame, better suited for intraday traders. Okay, so we have got this position, right? You can see it better now. It has opened, the first candle has opened above the pivot. It has consolidated this position and then boomed up. Okay, what you can do in this position is that you will have to look for shorting, because this was an unexpected rally, right? It was an unexpected rally. And one more thing that you have to remember is that it is going in a parallel channel which is downtrending. I already showed you on the daily time frame. I told you that the deductions we make on the daily time frame will be applicable on the smaller time frames. Correct. So the deduction we made was it was downtrending. So there will be a bearish momentum here, right? So this is a very steep uptrend. You cannot place a trade here. If you are going to place a trade looking at this position, 90% of it is luck, right? It is very fast. Although there is 45 minutes of trade here, if you'll go even in the 5-minute time frame, you might get a position. Obviously, yeah, I forgot that. So you will get this position. You might earn money here as well. But you have to look at this resistance, because from resistance it will go down. Now this again is a very beautiful position that has been created here. This candlestick, these two candlesticks, is called a bearish engulfing. I hate this rectangle candle tool. Okay, this one is better. This is called a bearish engulfing, and it has just happened on the pivot. What do you know, sir? How will you act in this situation? We will put a trade here, just below the short position from here. Where will you keep your target, sir? You will keep your target just above the next pivot. Where will you keep your stop loss? Just above the previous candle's high. Done. What is the risk to reward ratio? 1.93, almost double, right? And that is what has happened. Now, Japanese candlestick patterns, we are going to take in the next sessions of the live stream. So remember to subscribe and remember to follow us on multiple social media channels. This is absolutely fantastic. Japanese candlestick patterns are beautiful. They earn you a lot of money, and the understanding of this is so deep. It is so beautiful that you will love every single second of understanding Japanese candlestick patterns. Okay, every single candle. Uh, so this is the case, the first case that we have studied. Now next, we'll keep a short here. We will maybe look for some 50% averaging, like 50% you will buy back and you will cover your position 50%, and then wait for even further downfall, which has happened. You might have covered your position somewhere here in this consolidation. Now what happened here is another candlestick has been formed, which is absolutely fantastic. This one, array, this candlestick, the small candlestick, you're looking at this, almost a church wala cross, right? The, we usually have seen the crosses in churches, right? Almost that. And it is also called a dragonfly doji. Again, a Japanese candlestick pattern. So I'm teaching you from the future, right? Which I'm going to cover in the next live stream. So I'm teaching you that here itself. So again, you have taken a position here, looking at the pivot, no, but looking at the candlestick pattern. Along with that, you can use MACD, you can use RSI, depending upon your preference, whatever you use. What are you taking position here is, you're taking a long position here. You're keeping your target price. Now, this is a tricky situation, okay? This is a tricky situation. Why? Because if you're longing in the next trade, in the next candlestick, then there is an uncertainty. Okay, there is an uncertainty that the price may reverse, right? But just like a Marubozu, I have complete faith in this type of candle. Okay, where the real body is very slow, the upper wick is almost minimal, and the lower wick is absolutely gorgeous to see. It's very big, right? So you can take a position like this. Again, 1.69, good enough risk to reward ratio. take it, but it is bit uncertain, right? Next position we have got. Another thing, you will look for this kind of a candle, right? What you will do in this situation is you will figure out previous candles and you will figure out some form of a support and resistance. Our time is almost up here. Yeah, I'm not seeing that. Okay. What you will do in this position is you might keep a long position pending, a long order here, anywhere from here in the morning. So you keep a pending order, limit order of long in this situation. Okay. And you can earn so much money. You already know where to, how to take a target price, how to basically trail stop loss as well. Now, this position was bullish, so I will keep somewhere here my pending order of buying. Okay. Now you buy according to your trade size, according to your account size, and risk to reward ratio. Okay. So such certain candle will be formed where the price will happen to come here, come down here, and then okay, just close this. Okay, so this might happen that a single wick reaches your pending order limit and it will touch it. Your order might get executed, and then you will have good amount of money from there. Okay. Now somebody asked me a question. I will take that question. There can be false breakouts, right? Okay. So I will answer this one. We'll go back to our daily time frame and we will simplify this, clear everything up, do a quick parallel channel here. Hmm. Do a quick parallel channel. Hmm. Yes, there can be a false breakout. The price may go out of this particular channel. Now the magnet is not on, so it has not been formed properly. Now this is better. There can be a false breakout. Obviously, breakouts can happen. You might take a trade looking at the breakout, but what you have to look at is a strong confirmation as well. Now, where will this confirmation come from, sir? Any indicator, any form of strategy that you might have, or the best form to identify that is long term perspective on the particular asset class. So in case of gold, a long term perspective on gold, you might read something on that gold is going to be bullish for the next month, okay, or whatever it is, or some data you might have to look at. So you accordingly take the trade. But false breakouts can be avoided because once you wait for confirmations, your life becomes easier. You wait for that breakout to consolidate first, right? Now in USD JPY, I showed you what I had to wait for. I had to wait for a very strong bearish candle, and this is almost a Marubozu. So what next? What else do I need for a confirmation? Obviously nothing, right? So I will short in the next candle. This took a full day to form, na? Then I understood that this is a Marubozu. The next day I will short it. Understood? This is the way we might stay away from false breakouts. A lot of problems happen in the case of false breakouts. Okay, so you have to stay away from that. And almost we have done extra time. Okay, we have worked extra time probably, right? More than we ought to work for. But really nice teaching you guys. Really nice interacting with you. Sorry, could not take GBP USD, but probably in the next session. And next session will be probably on the Japanese breakout, Japanese candlestick patterns, and you will absolutely love that session. Looking forward to learning and growing together. So trade responsibly, and obviously wait for confirmations, wait for different uh, candlestick patterns to form or different indicators that you might like. So follow their advice. Don't be blind. Okay, just don't trade based on your gamble. Don't treat as a gambling. And yeah, absolutely fine. Thank you very much everyone for attending, and leave a like if you have you might feel like that you learned something today, isn't it? So yeah, thank you very much everyone, take care until next time, see you.